Hello, this is Brad Harvey, and welcome to the Q2 2020 update in the markets. Well, we've certainly seen a lot of volatility over the last 3 months, and the markets have been no different. We're in the midst of a COVID pandemic with lots of quarantines and mask orders and all sorts of other things going on. We have kind of a strange occurrence going on in politics. We don't know where the presidential election's going. We don't know where the Senate election is going. We don't know where the House election is going. And there are lots of protests going on over many different issues having social unrest. Well, the markets in the second quarter certainly had solid gains. After the precipitous decline in the first quarter, the S&P was down 20%, almost exactly. And it's recovered almost exactly 20%. So for you math geeks out there, that means we're still down 4%. Remember, the rule of change is the percentage change over time. So being down 20, being up 20 means we're still down 4. Gotta love the math. Earnings have not been good. That's one of the things that's a bit of a surprise, that the market has been performing so well, even though those earnings numbers are not coming out so solid. In addition to that, companies have been fairly hesitant to give good, solid earnings guidance. The unemployment numbers are very high. In fact, they're the worst we've seen in a very long time. We've had some surprises, meaning that they're not as bad as the forecaster said, but again, without earnings guidance and more numbers from those corporations, it's difficult to forecast accurately. So what does this really mean? Well, right now, we're kind of in a holding pattern with the market. It's trying to figure out what's going on. Remember, the markets are also good predictors of what will happen in the election, but not until we get into September. So right now we still have a few more months before that occurs as we gear up into that election season. Our forecast models, if you look out longer term, we see some inflation coming back. We have not had material inflation in a long time, but with the stimulative interest rate environment that we've got, the dollar is fairly high and probably headed south. We've got some lower productivity and very high government spending to get us through this pandemic. Those are all liable to result in some significant inflation. So keep your ears and eyes peeled and pay attention to that. There certainly are investing strategies that can do very well in an inflation environment. The last thing to keep in mind is that the Dow Jones Industrial Average and the S&P 500 year-to-date still negative, while the NASDAQ has positive performance year-to-date. Why is that? Well, technology certainly has seen an uptick in demand as more and more people are working from home. So this is Brad Harvey with the Q2 update for 2020 Harvey Investment Management. Thank you for tuning in.